welcome to the second episode of Dishing with Diane, a fireside chat. Our first one was a success, and we've made improvements, and here we are. So we're glad you joined in for episode 2. And today we're going to have Jonathan Chevalier. He is with SunTrust Mortgage, and he's going to answer a lot of your questions that you have about financing and mortgages and rates. And Jonathan is joining us a little differently. He was feeling a little out of sorts, so erring on the side of caution. He's joining me via live, Facebook Live and video, and then he'll be able to answer your questions. So, we've all learned to just roll with the punches since 2020. So, you got to flex. You got to just go with things as they are. So we're glad he could still be here. He's going to answer your questions. So, Jonathan, if you would introduce yourself to everybody, that'd be awesome.
Yeah, thanks, Diane. So great to be here with you today. Sorry I'm not there in person, but I'm glad we have technology and still able to make this happen. Just one quick correction to what you said. I am a loan officer here in the Raleigh area, but I'm with Southern Trust Mortgage.
Southern Trust?
Mortgage.
Sorry.
But that's okay. I actually think SunTrust isn't even around anymore. That's okay.
You're right. You're right.
But anyway, thanks for having me here. I'm excited about mortgages.
All right. So, what are some questions that I've heard? People asking is, of course, how are the rates? What's going on with the rates? Everybody wants to know rates. So, what can you tell us about that?
Sure. Yeah. I mean, obviously, we last year and parts of this year we saw just historically low rates. Frankly, the lowest that rates have ever been since we started tracking them. Most people are, qualified people buying new purchases at the end of last year, this year, we're buying rates, as low as 2.5% for new purchases. And frankly, even getting refinances at under 3%. We have seen just a slight uptick in the last week or so with rates, starting to move. But as I mentioned, it's still historically low. I remember when I bought my first house, 15 years ago, I was excited to get something in the 4 or 5%. Now, it's almost a given that you're able to buy mortgages in the 3% range or even, high 2%.
Yeah.
We don't know how the market's going to respond in the next, few months and into the new year. But, move on it if you can.
Right. Yeah. No one knows, right? No one has that crystal ball. You don't have that crystal ball, do you, Jonathan?
I wish I did.
Right? Yeah, so rates are low now, and who knows for how long and to what extent. And I think what you're saying is it's all perspective. When we bought our first house, we paid 8% mortgage.
Wow.
So, seeing these rates, it all depends where you are and where you've come into things and what you know and understand about what's low. So someone has a question, don't know if this is in your wheelhouse, but we're going to ask it, about the tiny home market and purchasing lands and resale and all of that. What's been your experience? Have you done any of those tiny homes? And
yeah, I can't say that I've done that personally. It's definitely a hot market right now. It's something that more and more people are interested in. It's hard for us as residential lenders to lend on that because it is essentially a mobile home, right? So it's not secured to land, secured to a foundation, and it is hard for us to lend on that. So there are specific lenders and companies out there that are doing financing for that specifically. I honestly don't know of anyone because it's not something I've delved into, but we do have partners if you're interested in buying land and want to build a house. We do have construction loan products, and we do have land partners that we partner with for that as well.
cool. All right. So when is it, in your experience, when is it a good time to consider refinancing? Like, what's that rule of thumb, if you will?
least looking at what the options might be. Um, some other things to consider. I've got a customer right now that's looking to do an addition on their house, so they're trying to take advantage of the higher kind of home prices and equity in their house to get money out as a refinance to build out that. So,
Okay.
you know,
So, okay,
there's a couple things.
cool.
Yeah.
So you can use refinances versus, I don't know, a home equity line? Is that different? How does that work?
Sure. Yeah, I mean, there's home equity line of credits, which, you know, in some ways works like a credit card using this. But, you know, it's a variable rate, goes up and down. If you did a refinance with a cash out, you know, you get a set amount of money that you can use for, I mean, construction, pay off bills, maybe pay for college, you know, maybe a kid going to college, or a variety of things, frankly. And then you have a fixed payment, fixed rate. You know, it's not going to change, and that, you know, your mortgage is locked in term at the loan.
Okay, good. So that's good. So that's how a home equity could work for people right now, because what people are seeing is, right now, homes are probably worth more than they have been in a long time. And same like rates, we don't know how long this is going to last, this seller's market where the value of homes has gone up, you know, quite a bit, and you can take a lot of equity out of your home. It sounds like you could either use that equity to put back into your home or maybe use it for other purposes, like college. Is that what you're saying?
Yes, ma'am.
Okay. And or you can refi, lower your payments, and or, you know, think about selling and take that equity and roll it into a different home.
Yep, absolutely.
So what about investment loans and that second property? Because people are doing that a lot too. You know, like you say, the home values are there, they've got that extra income or equity, and they're thinking about that second home or that investment. How does that work, and what are some best practices?
Yeah, for sure. So, you're right. A lot of people are looking at second homes or vacation homes, or maybe a cabin up in the mountains, or a condo at the beach, things like that. Or frankly, just, you know, trying to use real estate as an investment opportunity, maybe instead of what's kind of the standard, you know, stock market, mutual funds, things like that. A couple things to remember is when you're wanting to buy a second property or investment property, we usually have to qualify you based on both mortgages. So if you're buying a second home, you need to be able to qualify to pay for your first and second home, not considering, you know, maybe you want to rent it out on Airbnb or something like that. You really can't consider that in the equation. Another thing to consider with investment properties is we usually need to have a larger down payment than if you're buying a primary residence. So, you know, we've got programs now where you can buy, you know, your primary residence house with 5% or sometimes 3.5%, or even, you know, 0% down, depending on where the state you are. With investment properties, we do require at least 15% down payment. Sometimes, you know, if you want to avoid paying mortgage insurance, that would go up to 20% down payment. So just something to keep in mind if you are looking at those options, that, you know, you may need to have more money saved or prepared to put more money down to get into an investment property like that.
And are the rates different if you borrow for that purpose?
For a second home or like a vacation home, rates are pretty comparable. Sometimes there's little slight requirements, but for an investment property, yes, there usually is a higher rate. You know, that's equates to a higher risk for us when we're lending.
Okay.
I'm going to try and say, hey, it's a 0.5% different or something like that. There's so many equations that go into it, but it definitely is, you know, slightly higher interest rate.
Okay. So what questions do you all have out there? I see we've got quite a lot of viewers out there. What questions do you have for Jonathan about what you want to know. Maybe you're trying to figure something out. Is it the right time to do X, Y, or Z? So what's your questions? We got them here. Let's ask.
It looks like somebody is asking about maybe for younger adults what kind of credit they need or what they need to qualify. So what's great about being here in North Carolina and our company is we have a lot of programs for first-time home buyers or people that maybe don't have a big savings but want to take advantage of home ownership. In some areas, we can do loans with 0% down as well. We want to see 2 years of work history and 2 years of rental history. As far as credit, I wouldn't say there's any specific, like you need to have a credit card for 5 years or you need to have 3 trade lines or anything like that. We do have minimum credit scores that are usually in 620 or 640. But one positive for young people is hopefully they might get it on their credit report. Maybe they only have one small credit card that they use and pay off every month, or maybe they just have their first car loan. Even having 1 or 2 trade lines like that can establish a credit score, a good credit score, just as long as they're not doing anything negative. To be completely honest, I'm working with 2 people right now that are 24 years old buying their first home.
Wow, 24. That's
Yeah.
amazing. That's so great. They've got it together, obviously. Okay,
Yeah.
cool. So, and so we've got some folks who are on here that aren't in North Carolina per se. So is there any other rules of thumb in general with other states, or is it state by state, or how does that work?
Sure. So, depending on which programs you're talking about, like for example, here in North Carolina, there's MC housing. Most states have, say, for example, South Carolina housing or VA housing. That's kind of a statewide organization that helps people in homes. And there's also, for example, a USDA loan, which is loans that we can lend on houses that are in more rural areas. Those are going to have specific guidelines based on the county and state where they're at. There are websites out there that you can look, like at income limits or requirements, things like that. Frankly, that's what's great about people like myself. We're the ones that stay up and educate on these things so that we can advise the borrowers what they need to do or what they might be eligible for. So even if it's not me and I didn't work.
He'll be back. There you go. Lost. Okay. So just another thought. So what are some of the challenges you see when people show up and they're like, hey, I want to get a loan, I want to do this, and what are some of the challenges you find, and what are some of the coaching and counseling that you find you need to do to get people on a right path, whatever it is they're looking to do, like whether it's an investment, whether it is their first home, whether they are trying to get a home equity line, any of these things we've been talking about. What are some of the challenges that you can help people come better prepared for?
Sure. So a couple things that I run into pretty often are, sometimes there's a lot of resources out there, but we don't always have a clear picture of what a credit. You have websites like Credit Karma that are free, and different credit monitoring services out there. Those aren't always reflective of what we need or look at when we're qualifying someone for a mortgage. We encourage people to go to annualcreditreport.com where they can get and you can get it for free. Make sure you're looking at real accurate information. You know if there's anything negative or maybe something's wrong. A companies out there that want to help people. A lot of times they're a scam, or they're just, they don't have your best interest. So sometimes they just don't know what to look for. That was one thing I would say.
Okay.
That's important. Just getting a good knowledge of your credit, knowing what's on there. Is it right? Is it accurate? What you might need to.
Okay.
The
Perfect.
other thing I advise people a lot on is what goes into a mortgage payment. What does it actually cost to have a mortgage to buy a house?
Okay. Oops, lost you.
You buy one check or one payment a month to your landlord or property management company. Maybe that's $1,500, and that's your payment for the month. Well, when it comes to owning a house, there's more that goes into that. Usually, you have property taxes, homeowners insurance. You might have an HOA, a homeowners association, depending on your loan. You might have mortgage insurance. And then, you have to think about things like if your hot water heater goes out or something happens in the house, you're liable for that. You can't just call the landlord and ask him to fix it. So those are a lot of things I try to encourage people just to be aware of. Know that there's more than just one rental payment. And that's not to scare anyone. That's more just to I have to advise people on that pretty often.
No, absolutely. I mean, that's part of why I started this series. It's about educating and informing so you make the best decisions you can with the information you have, with the situation you're in. And nothing's more, frustrating or hard for someone to start getting all excited about something to only learn they can't do it. So I am a full believer in get your information, know what you're doing, and be ready to act in whatever it is you're looking to do. Like I said, it may be second home. It could be, you're trying to refinance and run the numbers, make sure it makes sense. Are you really recouping? And just be educated, informed, and knowledgeable. And that's why I've got Jonathan here and, helping you know where to go and the resources to look at. Another thing I see, because I also do new construction sale, and I'm curious about this because one thing I see is people come in and they don't understand the difference between the down payment for a builder versus their mortgage and that payment and that quote down payment. So can you say something about that?
Yeah, sure. And I see somebody else asked about renovation loans, and I'll try to answer that in the same conversation. But
Perfect.
For new construction, and here in Wake County, around Raleigh, we're seeing a lot of new construction because there's just low inventory of housing.
He'll be back.
Construction loans. So most builders are going to want to have some type of down payment. That basically secures the house for you. That lets them start or continue and finish the construction. And depending on the builder and type of construction you're doing, you may need to make payments throughout that construction process. And then when that house is complete, you'll have a closing. You'll have your final mortgage for that house, and you'll set that up and pay monthly moving forward. That's about how you're working with someone like Diane. They can advise you, negotiate on your behalf with the builders if that's what you want to do, and help you kind of get the best situation for you, and go on your behalf to get the best financial situation for you.
Yeah, cool. Because I just find people aren't prepared for that builder down payment. They think, oh, well, I'm getting a mortgage. I'm putting this percentage down. And we have to say, yes, that's a different thing. But the builder needs 5% or whatever. Or like you said, some of them do installments. They need so much at the start, so much at the foundation, so much at this point. So that is cash money that you need to have up front if you're going to go into new build. So talk about renovation loans, and let's see what we could talk about there, and then we're gonna wrap it up in just a minute.
Yeah, sure. And I will say renovation loans have been a little more challenging throughout the last year. So a lot of lenders have paused or stopped, just to, just the uncertainty of the market and the world in general. And then, cost of labor, lumber and all the different challenges that come with construction, made it difficult. Now, the way we kind of approach the renovation loans is that we get, kind of plans of what you want to do. We get quotes from builders or general contractors, and we consider what value be of the house when that is complete. Now, if you're adding square footage, maybe you're adding a room, maybe you add a garage, all those things kind of go into that consideration. Usually, higher interest rates, stricter requirements, higher credit score requirements, things like that. And then we're usually, kind of limited on, what's called a loan to value. So, the amount of the loan versus what the value of the house would be. It can be challenging, it can be a lot of work, but there are options out there if that's something you do. We've got a handful of different products that we can offer.
Cool. And just one last thing, because this market is a little challenging, and buyers, because of inventory, what are some best ways people can maybe buy? What options are there for buyers to be able to get money, get loans, be in a better position and a position of strength to go after those homes out there?
For sure. So the important thing with the market right now is if you're not pre-approved or you haven't, talked with a lender and got an approval, the chances of you getting an offer accepted is slim to none. We've got houses here around Raleigh and there's 10, 15 offers on the same house. And when the sellers and the seller's agents are considering which offer to accept, they want to look at what's the strongest offer that they have, what's going to get the sellers the most money, or maybe the best timing for what they're looking for. And so we always encourage you, talk to the lender first. Talk to someone that can verify that you're in a place to buy a home, what you can qualify for, and what will help you get into the best situation. That way, you go to put an offer on a house, you know you're approved, you know the loan can happen, and you know you'll be able to buy the house that you're looking at.
Awesome. Great advice. Thanks so much. So unless there's other questions, we're going to wrap it up for the second episode of Dishing with Diane, a fireside chat. I hope that you got what you needed to understand a better lay of the land of the finances and the mortgage side of home ownership or home buying or home selling. And I really appreciate you all participating. And we also have a raffle. Forgot to mention, we're going to be raffling off an Alexa Echo. For everybody that joined in live, you will be put into that raffle, and someone's going to be a lucky winner. And thanks so much, guys. Really appreciate it. Next month, we will be here again, March 25th, another Thursday at 4:30, and we're going to have a landscape company, and we're going to talk about everything landscape, lawns, planting, and everything like that, because spring is coming. Yay! All right. Thanks. Take care.